All right, everybody, welcome back to TFR Tech Talks. I'm Teddy Reyes. I'll be your host, and I'm here with the illustrious Rich Bishop. That's the founder and CEO of Mind Game Consulting. How you doing, Rich?
Good. And Teddy, it's mid-game consulting.
Oh, God, let me restart that. I
I
got
love it when people do that though. So that's
to
funny.
mess it all up. All right, I'll tell her to start from here. Okay,
Outtakes.
yeah, we got outtakes now. All right. All right, welcome back, everybody. This is Teddy with TFR Tech Talks, and we're with the illustrious Rich Bishop, the founder and CEO of Mid Game Consulting. How's it going, Rich?
Pretty good, Teddy. How's it going with you?
All good over here. All right, so let me give you the quick rundown on who Rich is, and we'll get right into it. So, he's the founder and CEO of Mid Game Consulting, a consultancy dedicated to driving business transformations through expert go-to-market strategies and operations. With over 20 years of experience that includes finance, systems, and strategy, Rich's journey spans diverse industries, consistently optimizing sales processes, streamlining operations, and implementing solutions that enhance overall performance. His personal touch and proactive leadership have earned him the trust of industry leaders. Outside of his professional life, Rich values family, sports, and personal development, bringing a holistic perspective to his work. All right.
All right.
Good stuff. All right, let's do this. Let's get right into it. So, uh, what I want to talk to you first about today is let's talk about the disconnect between sales plans and financial plans.
Whew, yeah, there's a lot to that, and any CFO I think will recognize this, where there's a financial plan that needs to go to the board and to the stakeholders, and there's a whole process that we start really late Q3, beginning of Q4 of putting this plan together. There's a lot of iteration that takes place kind of between October and December. Maybe there are a couple of different revisions that take place, but by the time you get to January 1st, most companies will have their financial plans for at least the next year, if not 2 to 3 years out, put together. And what I found is that there are actually a number of companies that will have a board facing plan, but for a number of different reasons will have a different internal facing plan for what they actually disseminate to the rest of the team, right? To whether it's to hedge their bets or to make sure that they're going to be able to stretch the team enough to deliver for the board. But then beyond that, when you look internally, you end up creating a number of department level plans, and many of them look like cost center plans, right? Cost center budgets. But when it comes to sales, the sales team is the one that actually is driving the revenue for the company. So that's the one plan that drives top line as well as helping to drive some of the bottom line pieces to this. And I've found that there are a lot of companies out there that still don't truly connect that sales plan, which will get you to the top line numbers, with the financial budgets and the plans that are being presented to the board. So obviously a disconnect there can create some big time problems, but there are some companies that are even very mature in their life cycle that still have a disconnected process between those two, that when you get to July, August, and all of a sudden the gap between the two results ends up becoming blaringly obvious. There's this scramble in Q3 to go, okay, do we reforecast? Or do we have to add a bunch of salespeople or drive up sales somehow, like a hockey stick at the end of the year? What do we do in order to close this gap? And so if those two pieces are connected to start with, it ends up making that process so much more seamless, so that there's not this panic mid-year, but that everybody's kind of marching to the same tune along the way.
So let me ask you, Rich, related to that disconnect, what are the problems that you've seen when that disconnect happens? Like, what are the type of things that companies go through because there's not that connection between the two?
Yeah, I mean, there's a handful of them, right? So number one, it's the efficiency that's lost when a finance team, an FP&A team, is sitting there and having to redo the forecast again, right? Anytime you create a reforecast, it drains your resources from looking forward on the business. That's one. Another one is you're going to miss your goals, right? If you're presenting to the board that you're going to produce X number top line, which then drives bottom line. If the sales team and the sales plan isn't living up to those numbers, then you're going to have a miss. That in itself causes its own set of problems and issues for individual executives, as well as what it means downstream. One of the other ones that comes into play that I've run into quite a bit is if a financial plan is built with a top line in mind, that then ends up driving staffing decisions, right? And operational plans and all of those pieces, development plans, if we're talking about a software. It, and if the top line isn't there, you're spending too much money than what you can afford to be spending because you've built it based on a false assumption. And so when those situations arise, you end up having to let staff go, which is never fun, right? You've hired too much, or maybe you're too slow to hire. And if sales were to go the other way, for example, and it goes much better than what was in the financial plan, well, then you may not be hiring quickly enough on the operational side and run into a number of other issues as well. So keeping these pieces together, make sure that you've got the right kind of systematic and sustainable growth for a company as it looks to move forward.
Got it. Yeah, great stuff. So I want to switch gears a little bit because you're talking about some of that disconnect. Can we also talk about what are some of the issues around manual system workarounds that you've seen in your experience?
Yeah, manual system workarounds definitely come from some of the disconnect that we were talking about. And that's more of a technology disconnect that happens, right? So on the revenue operations side of things, I'm used to working in a HubSpot or a Salesforce and making sure that those pieces are connected. But where I've found a lot of value is making sure that you've got Salesforce and other systems connected downstream as well. So when you're working with the different financial systems, whether it be Financial Force or others, to have a back and forth is so important because every step along the customer journey or the order to cash process, right? However it is that manifests in the business, where those technology components are disconnected, it means that there are manual workarounds that are taking place. And when that happens, it means a loss of productivity. And for a lot of companies, that's in place because it's always been there before. And maybe we haven't stepped back as a company to look at whether this makes sense to keep doing things this way. But Teddy, getting people to make that kind of change can be so hard sometimes because, well, this is the way that we've always done it. Or it's hard to justify the additional expense of connecting these pieces together. But I did run across a study recently by Forrester talking about this and the technology gaps that are created here. And what they found is that users on average that are in this situation are spending 2.4 hours per day doing manual workarounds when technology could automate those processes or feed that back and forth. So whether that's sending a new customer request or new vendor request via email instead of having the system automatically do it for you, those types of things, are working in a spreadsheet rather than in a data solution. 2.4 hours per worker or per employee that's working on that process adds up to a lot of time, especially as these companies get bigger and bigger.
Yeah, absolutely. So in my experience, I've seen a lot of this as well. And one of the things that I've done in one of my client engagements is actually document and quantify what manual process is costing them. So
Mm.
actually going through. So as a quick anecdote, if you've seen the movie Office Space, I used to work at Toyota Financial, and I actually was part of like filling out TPS reports and going through a project where we were tracking all those things. So that's where I got the framework from. But essentially, what it is that you take that manual process and you look at, well, how many times does that need to happen? How many people are doing that? How many times has this happened within that day, that month, that quarter, and extrapolate that cost wise over how much is this costing you? And especially if we're talking about things in the ERP space where you're looking at month end close, quarter end close, year end close, additional time to processing things can get you in trouble when you're going past the date that you're supposed to have all of the numbers ready to report, right?
Yes.
So these type of things have a huge impact. And then also beyond that, it causes you to have a bottleneck where if you were to have the good problems of growth, increased transactional volume, increased sales, now you're in the position of needing to throw bodies and overtime at
Yeah.
at the procedural and process issues to get all this stuff done by the deadlines versus having streamlined systems, automation in places, being able to batch things. So having that system connectivity from end to end as much as possible enables a lot of spending in a more efficient fashion on your systems, and your people can be used to work on things that only they can do with their attention. So taking the Pareto principle of trying to look at it from the 80/20 perspective of like, well, you want to try and automate processes in your business, at least that if it's all standard at 80%, so that you have minimal human touch from end to end, so that the people you do have on staff can spend their time looking at the exceptions and making sure those things are accounted for properly, and doing a lot of the working uh, proactively in the important, not urgent space in the Eisenhower matrix, so that you are able to get more efficiency and effectiveness from the people that you are having do this work. So
Yeah.
to the point that you made, there's a lot of value to be had when you connect systems together so that you have that visibility and that streamlined process flow from end to end.
Yeah, and to add to that, Teddy, I think it's also important that there's an impact to the top line as well, right? There's a lot of impact that's measurable on the bottom line in terms of efficiency and time wasted, that sort of thing. But on the front end, where that comes into play, and I've seen this a number of times, is that a sales rep in many ways and in many companies depends on finance in one way, shape, or form, whether that be for pricing approvals, whether that be for setting the customer up in the system so that implementation can do their part, right? Depending on the business. Sometimes it's contract approvals with legal and in some of those aspects. And so where the systems are disconnected, it creates a lot of frustration on the front end for the sales team as well, because that's dragging out the sales cycle and making it take longer. And sometimes I've seen it where there have been complications in communication back and forth because the systems aren't talking to each other, where sales have actually been lost. And so it impacts the top line as well as the bottom line when we look at that. And the last thing that we all want are lost sales up front, right? And we don't want our salespeople to be frustrated. We know that salespeople can be finicky sometimes. They have personalities. They're in front of customers for a reason. And when that happens and gets to the point of frustration, that ends up making an impact on the top end when we talk about revenue growth as well.
Absolutely. There's another topic that coincides with this that I'd like to touch on, which is, you mentioned we have the systems that we need to try to configure to make these things more streamlined, but the most impactful and the highest risk to mitigate is the change management aspect of dealing with people and what they're doing. And one of the things that I've found that works uh, as an approach is looking at it from that lens first, because from my professional experience, I came from being on the data entry side and on being like the end user and kind of the last of the chain in a lot of these operations from a billing perspective. So looking at it from their point of view and understanding, what are you asking them to change, why are you asking them to change it, did they feel like they had a voice in what was
Yes.
developed or what was done, and also level setting with them and letting them know that not every change that's going to happen is going to be to your direct benefit, but it is for the benefit of the company and the overall process. But if there are things that uh, can be done for them that would improve their quality of life or to make them more efficient at what they're doing, these things have been taken into account. So that's something that I've found as a heavy piece of, is this going to be a success or not, is do you have buy-in on the front end from the stakeholders, the end users, the managers, all the way up to the directors in the C-suite of what change is happening and why it's happening. And then on the back end, it's the change management and then the user adoption aspect that needs to be considered. That goes beyond technology and even beyond process, because you
Yeah.
need the process to be sound and make sense. You need the technology to be configured in a way that eliminates as much friction as possible. But the most important element is the human element.
Oh, 100%. I agree. And I've seen that part of it be missed so many times. And what's interesting is there are many situations where an executive will know this is the change that we need to make. We know that this is the right thing. But when the rubber meets the road and time comes to actually enforce it and change their own behaviors and their own habits, that sometimes they don't want to actually make that move. Right. And of course, if you get to that point, that kind of disconnect ends up costing a lot because now you've put the resources into making a change that you're not actually going to enforce. Right. And so rather than wasting that time, energy, effort, resource, it is important to have buy-in from the top all the way down. And one of the things that I've found that's really helpful here on the human element of this is within each department, there are certain people that have a certain amount of respect from their peers, right? Whether they're hard workers, whether they've been producing a lot, they're leaders within their teams, whatever it happens to be, if you can focus on getting those people to be bought in and to participate along the way so that it becomes their solution that's being implemented and not one that's being, kind of pushed down from the top of the mountain, that ends up having the biggest result. Because if the highest performer is adopting this, well, then why shouldn't I? And that tends to permeate throughout the organization. So that's not always easy to do, but it's incredibly effective when you're able to do it.
Man, that's a golden nugget from Rich. Thanks for that. I love it. Uh, so I want to talk about something that I want to hear more about: analytical maturity that can actually hurt you. Please explain.
Yeah, it's really interesting, some of this that I've recently found. This is from a study that Arizona State University had done, and they published the results in the Harvard Business Review. But we talk about, especially with what we do, helping a company to mature and to grow with the way that they are working with their data in the analytics. And so companies will put a lot of resources, especially as they get larger, into FP&A teams, right? And enabling those FP&A teams. You see that in RevOps teams as well, where you're going to add analysts, you're going to add people who really understand data, you're going to spend money on data warehouses and those things, data lakes, so that you can put all of this together and start to generate good insights from this. And what's interesting is that in this study that Arizona State did, is they looked at the maturity of a company in terms of their analytical capabilities, but then also the alignment that they have with their executive teams across the different departments. Right. So going back to having a sales plan aligned with the financial plan, and then all of the other downstream cost center type plans, making sure that those are connected. If goals are disconnected across departments and we mature the data analytics side of things, there actually is an inflection point where if you go from very low maturity to a mid-level of maturity, you get a bump in terms of productivity, in terms of results. But once you go beyond that, like mid-level, and you start to get more advanced with the analytics, if the departments and the teams are disconnected and are not truly aligned from a goals point of view, it actually regresses the advancement of the company, and it actually pulls down a number of the main KPIs. And in fact, when they looked at this, the main growth KPIs, when companies were disconnected and they moved from mid-level to advanced level analytics, their growth KPIs actually declined by double digits. So that in itself is just so important, to make sure that your teams are aligned and that you're growing in your analytical capabilities in a way that's positive to the growth of the company and to the maturity of the alignment of those organizations and of the different teams. Now, on the flip side, for the companies that were aligned, and I don't know if you're familiar with the concept of OKRs, but OKRs are key KPIs or key metrics that basically start from the top and then disseminate down so that everything is fully aligned and tracked and all working toward the same small handful, 3 to 5 company-wide goals. And when companies have that level of alignment at the executive level and they move their analytical maturity from mid-level to high level, they actually will increase their growth KPIs by double digits. So it's a stark contrast there. The maturity of the analytical capabilities are the same between those two groups. And what determines whether you decline 10% in growth or increase 10% in growth is the alignment of the departments and of their goals.
Wow, that's an eye-opening stat.
Yeah.
I think the analogy that makes sense to me is that if you don't have a shared direction, putting more fuel in the fire is just going to put you further apart
Yes.
as you move forward. So, that, being of the utmost importance when you're talking about those capabilities of having that goal alignment and having those things all kind of converge into the
Yes.
same objective, rather than having silos where they have individual objectives that if you start getting more justification from the analytics that you have, you start rowing in those directions, which may not be, convergent to the same place.
Yeah, I think that's a great analogy, right? Like if everybody's rowing in the same direction and you add fuel to it, we're all going to be moving faster in the same direction. But if everybody's rowing in slightly different directions, but everybody's going slow enough that you can't tell how badly things are pulling apart, if you add fuel to that fire, things will pull apart even quicker and really start declining the growth and other KPIs within the company.
Man, that's so interesting. Okay, Rich, let's switch gears. Well, it's not even switching gears. Let's keep going into it, because let's talk about connecting finance and client success.
Yeah, going back to the points about having a sales plan connected to the finance plan, and even some of the others where we were talking about having the systems integrated. It's really eye-opening when finance teams are well connected to the client success teams, how much synergy can be created there. And it's synergy both on the top line, like we see on the RevOps side of things, but also in terms of bottom line and in customer retention as well, right? So client success teams are typically client facing. They're concerned with the satisfaction and success of the client. Maybe they're measured on NPS scores, right? They want the customers to be happy, and they want the customers ultimately to do two things. One, to stay with them, and two, ideally, to be buying more, right? They want to increase the footprint that they have within that customer's solution set, whatever that happens to be. And so as the customer facing part of the company, that client success team needs to have customer data at their fingertips. There are a lot of teams that will have data there, like usage of a system, for example. Maybe they have the NPS scores, right? There are interactions that take place, whether it be emails or phone call check-ins, that sort of thing. But there's a financial aspect to it that's really important, right? Like accounts receivable balance. What's being overdue? Are there issues with the contract? Are there issues with credit? And when there is a tight alignment between the finance team and that client success team around those issues, and ideally an integration of the systems that make that information available at the client success team's fingertips, those conversations can go so much smoother. I'm sure you've seen this. There are a lot of times where a customer is going to have a question about an invoice, or maybe they're 90 days overdue or 60 days overdue on an invoice because of something that happened with the client success team. And so they're not paying because of something that the client success team is working on. And so when client success and finance, in this case AR, they're separated and they're not working together, you can have somebody from collections calling up, or somebody from that AR team calling up trying to collect on that invoice without the client success rep or manager even knowing about it, right? And now you've got this two faces to the customer thing going on that never ends up well, right? It always paints a bad picture for the company if the right hand doesn't know what the left hand is doing, right? So to the extent that that the client success team and finance team are integrated and working together, the better customer satisfaction is going to be, but also the more cross sell and upsell opportunity they're going to have to actually expand that customer. Number one, because they're happier. Number two, because this integration or the tight connection between those two groups actually can help identify opportunities for expansion as well. And so you can flag some of those opportunities for expansion right on the customer account there. So when a client success rep or manager is on the phone with their customer, they can bring some of those conversations up too right then and there. So it really can create a lot of synergy and eliminate a lot of pain downstream when those two groups are tightly aligned.
Yeah, absolutely. I'll share some experiences I've seen both from a consultative angle and from being actually in a company that this was implemented well and not implemented well.
Mm-hmm.
Because to your point about it being detrimental if it looks like the right hand doesn't know what the left hand is doing, especially if a customer or a client is not paying because they had some kind of issue, they're unhappy with some part of the service, or something is going on that they're like, hey, look, I'm withholding payment until this gets addressed. But then the AR person will reach out to them without that context of like why they're not paying. They're like, well, I just talked to my customer success manager or my account manager about this. Why are you asking me about this past due invoice? I'm not paying this. I already told them. Why are you not talking to them? You're not talking to the people in your company. It makes it look like you're dealing with separate entities rather than dealing with one company that is taking care of you no
Mm-hmm.
matter what the touch point is. On the opposite end of this, uh, to your point, I've seen companies do very well when they put together analytics about like, hey, here's the customer segment, here's the opportunities there. If they have this, then the upsell of this is something you should be pursuing because there's a high likelihood that they'll like this as well. And mentioning those things on the call is something you can do in a smooth fashion if all of this information is in front of you as you are addressing the customer. The issue is that this is not something that happens out of the box if you have disparate systems. You need this information to be readily available from an integration perspective, taking the information from your ERP or the order management system and putting that back into the CRM, where typically that's where your customers are being serviced from an account management and or a service platform if it's a service type call. So that is another element that I've seen
Mm-hmm.
work very well, integrating together from a holistic customer experience perspective of when anybody's dealing with the customer, any relevant financial information that they should know, open invoices, payments, credits, potentially
Mm-hmm.
uh, service tickets. So if they've got open requests, you can see how long they've been open, the urgency of these things, is the frequency of some of these things, and then looking at touch points of, when's the last time you called them? When's the last time you interacted with them? When is their renewal coming up? All of these type of data points make it to where when even as a consumer or as somebody that's working in a business dealing with a vendor, you like to feel like, oh, they know me about all the things that are going on within our relationship, and they're addressing them and making me feel like, oh, they're taking care of me and they're understanding where I'm coming from, versus like, hey, you're not talking to the other person in your departments. uh, get him on the phone. They should be able to explain this to you, why I'm doing this or that, right? So it
Yeah.
it actually makes a big difference.
Well, it's important to treat our customers the way that we want to be treated or that we would want to be treated in their seat, right? There are so many times where we look at internally and get so wrapped up with our own issues and disconnections and silos between departments that we lose sight of the fact that there's a customer on the other end of the line that's experiencing all of this. And we all know how frustrating that can be in that position because we've been there before, right? But sometimes we get so wrapped up in some of the challenges that we have going on with our own systems or with our own processes that we still forget to step back and go, wait a second, if I'm this person, what would I expect and what would I want to see and how would I want this resolved? And it's critical to be thinking about that way more when looking at these things.
Absolutely. I like the golden rule. I even take it a step further because I think it adds a layer of empathy, which is not only treat people like you'd want to be treated, but treat people the way you think they'd like to be treated. Because I
Mm-hmm.
think that puts another lens to it so that I'm not only looking at it from what I would want, but you can try to glean what they feel like they deserve or need out of the interaction. And that's something that will bring a lot more empathy to our
Yeah.
interactions with customers. All right, Rich, this was a great conversation. I appreciate it. Looking forward to many more in the future. Go ahead and let the people know where they can find you.
Excellent. Yeah. If you want to check us out, it's at midgameconsulting.com, midgameconsulting.com. And when we talked about having the plans integrated between finance and sales and the importance of that and having all of the stakeholders involved, we've actually put together an annual sales planning guide, which is completely free to everybody. And you can go to salesplansuccess.com for that. That information is out there for you. Free download PDF, take it, share it, have fun with it. But hopefully, more than anything, you can help use some of those nuggets to make your sales plan process a little bit more smooth so that you're not dealing with the headaches mid-year.
You heard the man. Go get your free sales plan. All right. This is Teddy Reyes with TFR Solutions. You can find us at Teddy Reyes on LinkedIn. TFR.solutions is the URL. From Teddy and Rich, thanks a lot. We're signing off.